The short answer is no, as authorities have moved to clamp down on excessive leverage in the property sector. We've seen time and time again that they've proved they are willing to allow some of China's kind of bigger developers to fail, and that they're willing to do that at the expense of many global investors. Essentially, concerns over the scope of developers' hidden debt and concerns that even strong developers now may be under pressure when it comes to refinancing or access funding for some of their debts is provoked a repricing of risk even across some of China's bigger and once considered safer developers. What that means is contagion risks across the industry could rise, and this could spread well beyond just the property industry into the financial industry and into the broader economy. The big new risk this year is seeing that some of China's biggest and strongest developers are now being hit with many concerns over potential hidden debt and over concerns that their access to funding might be tightened. Now that's crucial because this year Chinese property developers need to repay or refinance about $99 billion worth of bonds. Nearly half of those are offshore bonds. And while many of the weaker developers have been unable to pay those debts, triggering a wave of defaults, stronger firms have been assumed to be able to access the market and access funding. Now we're seeing fresh concerns that may no longer be the case.